In many ways, the year 2021 was a watershed moment for the stock market. India saw a slew of IPOs, a surge in investor interest, and record breaking indices. As the Union Budget 2022 approaches, experts speculate on market trends and which sectors will be highlighted in this year's budget. According to the last 5 years of market performance data, the stock market prior to the budget has seen a rally every year except 2020. Nishant Srivastava, head of retail broking and distribution at Reliance Securities, discusses the current state of the stock market and which sectors will be prioritized in the union budget.
The scenario which says yes looks very promising in 2022 as well. Despite near-term hiccups, we believe few key triggers like lower interest rate, capex revival, increasing global presence, higher export through various government schemes, and most importantly 44 reversal of commodity prices globally augur well for high profitability for Indian corporates in 2022. Looking ahead, we expect the earning upgrade cycle to resume soon with better margin profile on the back of lower raw material to sales ratio, while Indian economic growth witnessed a marked improvement vis-a-vis global major economies. Certain factors like China Plus One strategy, PLI scheme to boost local manufacturing, adoption of EV vehicles, and focus on green energy helped economic development and an increased trust on global investors. All these factors helped the Indian equity market to close at all-time high in 2021. Looking ahead, we expect ongoing volatility to continue over next 1 or 2 months before the US Fed bond buying scheme ends. As further, the FII outflows would persist for the next 1 or 2 months. India appears to be better placed in terms of handling the situation in pandemic, be it with the first wave, second wave, Delta variant, or current ongoing Omicron. Because of that, we expect fastest revival from the current slowdown, along with similar strong bounce back in the market. We expect FII inflows to return in first half of 2023, while DII's investment would continue in 2022. Equities would continue with the outperformance with double-digit returns. Our year-end 2022 Nifty target is to 20,000 at 22x the FII 24 estimated earnings. We expect Nifty to enjoy a premium valuation for the next 1 or 2 years on the back of high earnings compounded annual growth rate before reaching to stable earnings price of growth as India becomes a preferred destination for global manufacturing going ahead. The trend would continue over the 4 or 5 years, supported by China Plus One policy and the government support for various industries sector like IT, engineering, capital goods, EV ecology would continue to be focused in 2022. Automobile is the another promising sector on which back of likely demand revival, better supply and commodity softening. Our 2022 year-end target for 20,000 for Nifty implies around 11% return from current levels, which is also very healthy if you compare with other bigger economies. We expect budget focus would be on capex revival and electric vehicle side, supporting growth for sectors like capital goods, consumer engineering, EV value chain, automobile, auto ancillary, charging infrastructures. So all these sectors which we think that will continue to do well, and our preferred sectors will be definitely IT sectors, which is going to be a bigger growth sectors, and capital goods and engineering, EV segment and automobiles. These are the four sectors which are preferred sectors for us.